name is Vincent Chok. I am the CEO of First Digital Trust. We are a registered trust company out of Hong Kong. And the reason I'm here today is really to talk about who we are, because there's a lot of questions. People are wondering, First Digital, we've never really heard of them, but we've been around for a while. And we are a qualified custodian. We have all of the licensing required to manage assets. So we started out about 2016. We're an offshoot of another traditional trust company, which was focusing more on, this is a big spectrum, retirement plans and pension plans. So I don't see anybody in the audience that's ready to retire, right? But so we do structuring, we do custody, and we do trust work. And how we got into the industry was really during the big boom ICO days, where people were looking for some sort of custody and a way of converting their Ethereum and crypto into fiat so that they can pay bills. And so this is how we got introduced into the whole digital asset. And we're talking 2016, 2017. So the question is really, why does a trust company need to be in the whole Web3 digital asset space? And I want to go through exactly, just to introduce a little bit about not only First Digital, but the actual idea of what is a trust. So a trust is really, you've heard trust, this word has been thrown around, but there's a lot of different levels of trust. I mean, every day we wake up, somehow we rely on trust, no matter how small or no matter how big. We wake up, we take a bus, we trust the bus driver will arrive at the stop to take us to our next destination. Or we go to a restaurant, the restaurant will trust us to actually pay the bill after we eat, right? So they give us the food and we eat. And then there's legalized trust. So the whole idea of trust started out during the ancient Roman days, whereby Rome had the idea that they wanted to conquer the world, so a lot of their soldiers were going to war. But they had assets. And what did they do? They were afraid that they wouldn't come back from those battles. So they've said, okay, well, if I leave my asset to somebody, would it be possible that if I do come back, that there's a contractual relationship that you give that asset back to me, but if I don't come back, I'm gonna pass that down to the next generation or to my next beneficiary, whoever I name, wife, daughter. So that's very similar to the modern trust. And the papering of that, the contract, is what we call a deed of trust. So this is an important sort of how we get to where First Digital's sort of the future of how we want to see trust going on chain, and the type of assets we hold. So with that, Romans, they had the trust, they go to battle, they come back. Now, if they do come back, those trust assets go back to them legally. So it's not very different than what we see today, is that a trustee, First Digital, works with a settlor, who is the person that actually puts the asset into trust, and they name the beneficiary, which is it could be the child, it could be clients, it could be anybody that has the settler's permission to pass on those assets. So there's a really important role that trust company plays in Web3. And I know that there's a lot of questions on why, as a decentralized platform, are there trust companies who are so centralized about holding the real world assets, putting your foot on the title. So putting your foot on the title is really important, because that means when we tokenize assets, fractionalized assets could be held by people that do not know each other, but they're co-owners of a property, a house, co-owners of stocks, co-owners of anything that has value. So for us as First Digital, it's very simple. Our business model is as sort of like a control center. We don't own banks. We don't own wallets. Sorry, I should go with the script. So we don't own logistics centers, but what we do is we're title holders. We take the responsibility of holding those assets for the clients. So what that means is we run treasuries for fiat, which is a bank, correct? Our treasury for real world assets, like for example, gold, is logistics centers like Brinks, Melkamit. Our treasuries for crypto could be wallets like Fireblocks or Ledger. And our treasuries for securities are brokerages like Interactive Brokers, because this is really how we manage those particular multi-assets. And so that's our background. We know if regulators say crypto is a security, we know how to handle that. If crypto is a currency, we know how to handle that. If crypto is a virtual commodity, which is what Hong Kong deems crypto as, is a commodity, is a virtual property, which is where a trust company in Hong Kong is able to custody. So it's a very unique proposition where we live in Hong Kong, that we can handle digital asset as a trust company because we're not regulated by certain securities regulators like SFC or banking regulators. So that's kind of the background on First Digital. I already gone through this, but essentially, First Digital's role is very pivotal in the whole stablecoin industry. We launched FDUSD as a US-denominated stablecoin that's backed one-to-one to the US dollar, which I'm sure all of you have heard about. And we've launched it since June, end of June, and we're doing quite well. The TVL right today, I think, is 683 million. Trading volume is over 2 billion. And the reason I think for that is people are looking for strong alternatives to Tether and to USDC. And the Hong Kong government has recently announced a guideline licensing regime for stablecoins that will come out next year. And that's really important because right now, without that, we have grown to being the largest Asian stablecoin issuer in Asia. And with the government support of Hong Kong, it just means that we have the ability to scale up. John Lee, the chief executive of Hong Kong, has openly said that Hong Kong will be the global hub of Web3. And they have encouraged banks to actually bank crypto companies, which is unheard of so far. We haven't seen any regulators around the world telling banks to actually bank crypto companies. So that's a big step. And we feel by launching FDUSD, being the first regulated stablecoin, being able to challenge the likes of not only USDC, but Tether, and being able to scale, being transparent, providing enough transparency in the sense of attestations, letting the users know exactly how the underlying reserves is managed. And this is another thing about the uniqueness of Hong Kong as well, is that as a trust company, we operate on a dual balance sheet basis. So what is a dual balance sheet basis? Meaning that the assets is on a client balance sheet, not on the trust's own operating balance sheet. So if anybody comes after the company, the assets are protected by the Hong Kong government. So I think these are real strengths that we see, the advantages of what we're providing. And for us, as somebody that's relatively unknown so far, and this is the reason why I want to introduce who First Digital is. We've been operating in the crypto and digital asset space for just over 5 years. So we understand, again, we've managed stablecoin reserves in the past. We've done different asset classes that has been tokenized for stablecoins. But the fact is, I think that the real result of where we are today after 3.5 months of launching FDUSD, it shows that the users are really looking for something more stable in the sense that it's not only backed by the dollar, but in the way of transparency again. So that's our market cap. It's quite impressive. I think it took USDC 2 years to get over $1 billion in market cap in TVL, but we're really bullish on the fact that we have the support of exchanges like Binance, who is really thinking they do need to offer other alternative stablecoins to the users, and this is a great. I mean, you can see the chart. So what's the vision that we see FDUSD and FDT doing? We want to also integrate FDUSD into different use cases, payments. We want to integrate FDUSD into gaming space, DeFi. So we're right now we're on Uniswap and we're on PancakeSwap, and the volume is growing. We're not only trying to attract users trading FDUSD, but we do want it to be a digital currency and the first regulated digital currency to be able to off-ramp and on-ramp with CBDCs. So that's a huge, huge benefit of where we see FDUSD going. So I'd like to, actually, I don't want to put anybody to sleep because I don't want to be talking too long. I'd like to invite Raj up here. He is the global BD for Binance, and there are some questions that he does want me to answer because there's a lot of FAQs that people are asking. Come on up.
Hey, Vincent. Thanks for having me here. I guess just so the audience is a bit more alive, should we start with a quick question for the chance to win some FDT swag? Vincent mentioned that the TVL and the trading volume actually of FDUSD today is at around 2 billion, just over that, right? Does anyone know what the peak trading, daily trading volume was for FDUSD? Anyone here can take a guess? Chance to win some FDT swag? 1 billion? Higher. Slightly lower. You want to tell them?
Yeah, sure. At the peak, about a week and a half ago, we hit 4 billion trading volume.
And that's absolutely incredible, Vincent. I mean, you talked about FDT and its history, right? It's one of the reasons Binance chose, obviously, to list your token, and one of the only few stablecoins actually on the Binance platform. Incredible success that you've seen. Do you think FDUSD and FDT can really be a bellwether for the industry? And once you start building it, what are the similarities and differences you really see between USDC, USDT, and your other stablecoin peers?
I think choosing a stablecoin is almost like buying a car. What is the bells and whistle that comes with it? So for us in Hong Kong, we look at what is our banking partners. So we spread the risks. We're not concentrated on one bank. So we diversify. We work with tier 1 banks. We work with broker dealers that are invested. So it's about counterparty risks. And I think that is lacking in the other stablecoin because they're so concentrated on using one financial or two financial institutions that could be questionable about what level of, are they tier 1, tier 2, or tier 3. So what we offer, as I mentioned, because we have the support of the Hong Kong government, that we're dealing with very strong banks that has strong balance sheet, and our counterparty risk is spread out. So if we don't like a return of one particular financial institution, we can move those assets to another one without even worrying about that being tied down by those particular partnerships.
Yeah, I'm really glad you mentioned counterparty risk, right? In the traditional finance world, they learned that painful lesson in '08. And I think for us in the crypto space, we learned that painful lesson too, not so long ago, right? So, obviously everyone knows there's use cases for stablecoins. Everyone understands why TVL has increased, why trading volumes have increased. But another real focus for everyone in the stablecoin space is transparency, it's governance, it's actually operational due diligence, right? How can we actually ensure, and how do you ensure that FDT is following all those three aspects whilst balancing the growth of TVL and the growth of trading volumes?
It's not us ensuring that. It's going to be the Hong Kong regulators having their eyes on us. And having HKMA being the regulators, who is also the regulators for banks. So our reserves are constantly under the same membership banks as the central bank regulators. So with that, it's not only us having that responsibility and accountability to the token users, but for us to manage those reserves in a very proper, compliant way that actually makes the scalability of FDUSD. And Hong Kong is also third largest financial center in the world. It doesn't have exchange controls. There's no capital controls. It has very strong financial infrastructures. And we think that, what else can you really ask for in a sense of a stablecoin issuer where the reserves are held in such a strong ecosystem?
Let's talk about Hong Kong. Yeah. I mean, it's an incredible financial hub, building its reputation as a Web3 hub in the next coming few years. FDUSD is obviously the largest stablecoin being issued out of Hong Kong at the moment. How are you working with the Hong Kong government, if you are, and how do you ensure that you're building proactively but also prudently alongside the regulators?
So we're participating in a lot of different groups that are actually consulting and working with HKMA on how to draft this particular licensing guideline, using not only people from the trust industry and the finance industry, but they're also talking to people in the tech and Web3 industry. So that is great because it actually shows not only about the underlying reserves, how it's held, but how the usage of the stablecoin can integrate into Web3. How do we integrate into payments? So it's great to see that communication line is being so broad and opened up to different players in the Web3 market.
Absolutely. And as we mentioned already, right, the use cases are clear, right? They're clear today. As you work with the regulator, maybe this is a bit of a left field question for you. FDUSD, incredible success again, right? What else do you have up your sleeve? I mean, maybe an insight into other products that you might have in the pipeline, other things that we might see, especially as you work closer with the regulators and as FDT as a firm and FDUSD build?
Well, I want to kind of draw back on our experience as a trust company dealing with all of the succession planning, trust, pension aspect, how we can bring that to the whole Web3 space, because in reality, assets are assets. They're still something that you accumulate within your lifetime. But there's really two certain things and two very high certain things. And those two certain things are, can anybody guess? One is death. We're all gonna die. And the other is taxes. I mean, we can try to get away from that, but, and then the two high certainty things today are divorce and identity theft. So regardless of you have crypto held in your own nano or Trezor wallets, those assets needs to be protected because one day we're all going to leave this earth. So we're trying to build products where you can still have control of your assets, but within a succession, how do I pass that on to my next generation? And what if my next generation doesn't even know what a Bitcoin is, right? So these things are really important for us because I think that, like banks, there's a lot of unclaimed accounts. We're talking about hundreds, if not trillions of dollars globally of bank accounts being dormant or unclaimed because people just died and didn't even have a succession plan. What happens to those assets? I know there's a lot of talk about, hey, how do I recover my keys if I forget, if I drop my cold storage, or if I forget my keys, or I knock my head on the ground and forget who I am. But if somebody actually recovers your key, but who's actually managing the underlying asset within those accounts, your exchange accounts, your own hot wallet accounts, or your cold wallet accounts? So what we want to do is really introduce and really work with the industry of saying, yes, we understand the importance of decentralization, the importance of having control, but guess what? What is control really? The control of having something that's being held by, sorry, I'm going on, but John D. Rockefeller, who is one of the richest men in the history of mankind, quoted, he said, own nothing, but control everything. What that means is a trust structure is the great way of asset protection. There's a lot of people that are so rich. You can see, they drive Lambos, they hold, they drink Cristal. But in reality, the really wealthy people and the rich people they do not hold assets in their own name because asset protection, you're subject to creditors, you're subject to what I just said, divorce, death. Those are unseen entities that can come after your assets. It's not only the tax man.
Yeah, you left me with a very cheerful thing to think about today. But just one last point on that before we end the talk today. What does that as a product look like, right? You mentioned succession planning. What is that as an actual product that people here listening today can actually purchase in the future? How does that look? And how does that fit into maybe centralized exchanges?
Well, we want to make it very simple because a product like this in the real world, to hold a trust, could be in the thousands or tens of thousands of dollars set up. But we want to make it very simple where it's a very retail-oriented way of saying, okay, you still manage the product, you become the trustee of those assets yourself, we become your co-trustee, but you name your beneficiary. So again, if you think about a loop or the relationship, there's you as the settler, there's the trustee, and there's the beneficiary, okay? So that beneficiary will inherit anything in case something happens to you. But the exchange, the centralized exchange would be the custodian of those assets. So it doesn't really look differently, but in the background, the legal ownership, the legal entity changes. So that's how we foresee working in the future with users of exchanges to protect their own asset in a very simplified way.
Excellent. Thank you so much for having me here, Vincent.
Thank you.
Ladies and gentlemen, Vincent, CEO of FDT.
Thank you.